Assalamualaikum and hello everyone. Welcome back to my channel. In today's video, we are going to do another question involving the self-constructed PPE, looking at that under Mfrs 116 property, plant and equipment. We'll be looking at an illustrative example coming from a previous common test question. The question is question 3, February 2017. This is about a company called Jengke Indah, which is a furniture manufacturer. So it is involved in production of furniture. And that was located in Bandar Jengke. Due to the increase in the demand of the newly designed furniture, the company decided to build a new plant. So they are trying to construct a new plant. So this is telling you that this is a self-constructed PPE. All right. So the construction starts on 1st of January 2015. 1st of January 2015 is the date of construction, and that will take 12 months. And so let's look at when is that 1st of January 15, and the plan was first used on 1st April. So basically it was somewhere here 31st of December 15, but it is only ready for its use on 1st of April 2016. So this is and that is to be expected to be used for the next 10 years. So this is the expected useful life. The plant was constructed using the company's own resources, which includes direct material. So we are going to look at which one would be capitalized, which one would be expense of, with the guideline given under Mfrs 116 on PPE relating to self-constructed property, plant and equipment, direct labor. So we're going to look at what are to be capitalized, what are to be expense of. And general and admin overhead, direct overhead, material wastage, and engineer and architect fees. The company decided to provide depreciation on the new plan at 10% per annum. So this is straight line method, and it is using monthly basis. So the year end of the company, or the reporting date, the financial year end, is 31st of December each year. So the first year end, we have to look at the requirement, identify the new constructed plan, whether or not the new constructed plan is an asset of the company. So you must make sure you get it right. This is about an asset of the company. So look at the definition of asset. Therefore, a plan can be considered as an asset of the company. Recall, plan is actually the resources controlled by the entity. Why? Because it was being constructed and later it will be used for the production. And here it was a manufacturing plan. So it was used for production or manufacturing process. Then you have that was at the discretion of the company. It was as a result of past event. The construction project or the construction of the plan was completed in 2015. So it was completed after a year, 31st of December 2015. That was as a result of past event. And the first one was on economic resources control, and the third one is that the company has the right to use. So the economic resource here is a right. So the constructed plan will produce or manufacture furniture, and that will increase the production of the company, and that will meet the demand. The demand will normally by way of the one from the customer, and this will somehow increase the economic benefits by way of revenue. So it has a potential to produce economic benefit. Next, you are asked to describe the second part of the question, whether or not the new plan is an item of PPE. And this one will need you to first recall what is the definition of PPE. So you need to look at whether or not it is a tangible item. Does it fulfill the function of PPE, which is used in production for supply of goods or supply of service, for rental to others, and whether or not that is for admin. So any one of the function, it does not need to be all. And is it being used for more than one period or more than 1 year? If it fulfills the three key features there, that is a PPE. So let's see what we have here. The new plan satisfies the definition of PPE. So your answer is actually yes. Why? Because the new plan has physical form, or it is a tangible item. It is made of bricks and steel. Next is that it is held by the company as a place for the production of the company's product, or the product of the company here is the furniture. The production is manufacturing of furniture. So that was held for production. So it was held for production. And it is expected to be used for 10 years. So 10 years is actually more than 1 year, more than one reporting period. So all three features are being fulfilled. So it is a PPE, item of PPE. Right. Let's look at the next part of the question. The next part of the question is to identify the three components of cost of a self-constructed property, plant, and equipment. Remember, the plant here is not what you buy, but is a self-constructed PPE. So according to the Mfrs 116, the component of a self-constructed PPE, you can also refer to the textbook by Tan Leon Tong, our financial accounting and reporting in Malaysia, chapter 10, which is at 10.3.2, page 398. Right, so you can refer there, go and take your book. And these are what have been mentioned in the book, as well as what was also coming from the standard. So whatever cost that relates specifically to the construction of the assets, such as direct material, direct labor, and other contractor costs. What are the costs that you pay to the contractor that was assigned to construct your plant? So recall what were just given for the case of Jengke Indah. We were going to apply that. The next one, so it is specifically related to the construction. The second one is that costs that relate to the construction in general, and that a cost can be allocated. You can go and allocate to the assets, such as engineering costs and technical costs. Next is the cost of borrowing. Cost of borrowing are, for example, the interest incurred on the loan that were taken to finance the construction of the asset until it is completed. So let's say it was completed on 31st of December 2015, right? 31st of December 2015. So that whatever between the start of the construction, which is 1st of January 15, it completes 31st of December, because after 1 year, that is the construction period. Look at when is the construction period. 1 year construction, right? So within this period, you are going to include that as part of the cost of the PPE. So that will be capitalized. However, after the construction period, the interest incurred will be expense of. That is in line with paragraph 1 and 5, Mfrs 123 borrowing costs. The next one is also to consider or to exclude the internal profits. You have any internal profit during the construction, the abnormal wasted material, maybe you have material that you bought, some of it was not used, it was wasted, or the cost of efficiencies will also be considered, but this will not be included, but however this will be expense of or will be excluded. So that was for our case. So to relate to our case earlier, these are the item that will be included. This is in line with the first part of the cost of the self-constructed plan. And remember earlier I mentioned that you need to go and exclude material wastage. So the direct material, if you can recall earlier on, the direct material was 2560, you can see here, and you can also notice that the 60,000 was what wasted, so that has to be excluded. So these are going to be capitalized, this will be capitalized, this one will be expense of general admin. Direct material, direct overhead will be expense of, but this one will be excluded. Engineer and architect fees will be capitalized. So we go back to the part that we were calculating just now, right? So direct labor, direct overhead, and engineer and architect fees. Do you have any other material inefficiencies that should also be excluded, right? So the total initial cost is 4750 million. Next one, you are asked to explain the term depreciation. This was just easy thing. Remember, depreciation is actually an allocation of your costs or depreciable cost of the asset. Depreciable costs over its estimated useful life is how the plant is being used up. For example, in the period of 10 years, because 10 years is the estimated useful life. So the reduction in the value of the plant systematically, that is what you call depreciation. It is also a measure of consumption, wear and tear, or decline in the value, which are due to the technological obsolescence, passage of time, as the asset, the plant, for example, is being used up in the manufacturing product of the furniture. So in that is actually the ordinary cost of the business of the entity. Next is to calculate the depreciation. So you have already calculated the cost of the plan, that was 4750, multiply with 10%, and that would be 356,250 multiply with 9/12. Okay, let's go back and see what you have earlier in the information to see what you were given. So you can see that the construction of the plan was on 1st of April 2016. So if you were to calculate the depreciation, it should be from the date 1st of April 16, the date that it is ready for its expected use, and the first accounting period would be 31st of December 16. So this is for 9 months, and remember we use monthly basis. So that is why the initial cost is later being apportioned for 9 months, because of the period in that current year, which is the year that we are concerned is this one, 31st of December 2016, from 1st of April until 31st of December 16. So that gives you 356,250. These other factors, according to the question, you are asked to also list down the factors that may limit the useful life. These are the factors, physical factors. The more you use physically, the asset will be faster in terms of its wear and tear. Technological factors, the more advanced a technology is, the asset will have to be quickly obsolete, right? Because other assets will replace other model, other technology. Then economic factors such as the changes in market perception, demand, and also whether or not your asset is still comparative. Legal factors, the ruling or whatever regulation that you may have to comply within your jurisdiction. And the next one is in the year ended the 2016 31st December, Jengke Indah incurred further costs of enhancing and maintaining the plant to ensure that it is in proper condition. Okay, that is what happened. This cost also include renovation and also general cleaning and repainting, so which is considered as subsequent costs. Subsequent costs or subsequent expenditure are the costs incurred after over the life of the asset. Subsequent costs, when after it is ready for its intended use, you incur more costs, and that is actually subsequent costs incurred over the life of the asset up to 10 years, for example. Here discuss the two treatment of the subsequent cost above. So you have two subsequent costs. Here is renovation, another one is general cleaning and repainting. For the renovation cost of the plant, these are actually an example of capital expenditure. These are example of costs incurred that enhance the value of the asset, which increase not only the future benefits of the asset, but that is beyond the originally assessed standard. So if you have done renovation to the plant, maybe you can have more production capacity, right? So that will be treated as capital expenditure. And in terms the renovation cost, if it is, let's say, 100,000, it will be capitalized, and that will become part of the cost of the plan, meaning that added to the cost of 4750, the initial cost, if there is an amount given. Second one is for the general cleaning and repainting. Cost of general cleaning and repainting are an example of cost incurred just to ensure the asset to be in proper working condition, which is just to maintain and ensuring it is just in its proper working condition without adding or enhancing the value of the asset beyond its existing standard. So it was just to maintain. So the cost incurred just to merely replace or restore the originally assessed standard of performance, not to increase the standard beyond its originally assessed standard. So for this one, for the cost of general cleaning and repainting, you are going to treat it as revenue expenditure, and that will mean that you need to exclude that from the initial cost, and if that is so, you are going to treat it as an expense, and that will be shown in the profit or loss. Treat as an expense, it will not be capitalized. That's it. I'll see you when I will see you. Thank you for watching, and till then, assalamualaikum, and have a pleasant day ahead.